Time now. Let's get to Tyler Bolhorn is with me. Of course, Tyler is the founder, stockscores.com, successful author. If you've heard him speak, you know he does a fantastic job. And I might add, he's about to do a free webinar coming up after the show. It's great because in a webinar, when we talk right now with Tyler, he can't show you his charts. So the webinar is going to get a chance to kind of go over there. And that's absolutely free if you go to moneytalks.net. Tyler, first of all, appreciate you taking the time, but I love you hooked me with that title, by the way, how to analyze any stock or market in 10 seconds.
Yeah, it is. It seems a little bit unbelievable, but with the things that we can talk about today and the things that I'll go over in the webinar, it really is possible. And in fact, when you get good at it, you can even do it faster than that. There's some basic principles of chart analysis, which are a great reflection of what the market thinks or believes about the fundamentals of the company, about the economy. And if you can understand those basic principles, you can look at any chart. It doesn't matter if it's a commodity, a stock, a market. It doesn't matter. As long as you have a chart, even the Vancouver real estate market, we could look at a chart of that and quickly determine where that thing is likely to go.
I think it's just such a key tool. And where it grabs me, there's several ways it grabs me. As you say, you can judge when a downtrend is over, when an uptrend is finishing. But the one that I think that comes to mind immediately for me is that when people don't look at a chart, is that this is where the bargain hunter goes wrong. You know, where they think, hey, that looks cheaper than it was. Yeah, you're right, but that doesn't mean it can't go a lot lower. I mean, Dennis Gartman talks about that a lot. Jim Dines, our old friend, I love a little thing he did years ago when he spoke at one of our conferences where he just keeps on putting up charts. He says, you don't need to know the name, but tell me, is that going up or down? You know, it's that straightforward. If you don't, you're just robbing yourself of such an important tool if you don't have a look at the charts.
It really is. You know, a common saying in trading is that the most expensive way to buy a stock is to try to pick the bottom, because we never know where that bottom is. I, as a trader, don't worry about catching the very lowest of prices. I want to buy it when it has the best probability of going up after I've bought it. Yeah. And we can use things like trend lines, as you say, a simple concept of a rising bottom out of a trend line break. And that tells us things like when to buy the oil market, which happened in February of this year. Didn't buy the bottom, but I bought it as it was starting to turn when the probability of success was the best.
Yeah, well, that was the last time you were on with us. That's specifically what you were talking about. That the oil market looks like it had taken, a bottom of significance. And yeah, it's turned out to be a hell of a trade. I mean, especially when it bounces up through 44 to 46. And I got to tell you, I was out awfully earlier on that. I should have paid more attention to my charts.
Yeah, and that's always the problem, is we struggle with our emotions, with our emotional attachment to money. I always like to say, if you are a normal human being, you are predisposed to fail in the stock market. But one of the benefits of charts is that it takes the emotion out. It's just the ultimate arbiter of truth. It's what people are doing with their money, not what, some talking head on financial television might be saying they believe. The chart reflects the opinion of millions of traders and investors around the world.
And it should be sort of very intuitive for people, because, I mean, if you were going to bet on a couple of sporting games, you certainly look at the past performance of the teams as an example. And that's all you're measuring, is what's the past performance in terms of time, price. It could be volume, all sorts of variables. But that's what you're really looking at, is you're saying, let's have a look at what's been going on, really. And you have your own specific and I think quite unique ways of looking at that. And you explain it beautifully in your book, The Mindless Investor, when you look at abnormal movers and you say, what's that trying to tell me? And I just think it's great stuff. And it's something so easy for people to do.
Yeah, and thank you. The idea that I trade on is that fundamentals matter. A lot of technicians say, I just look at my indicators and that sort of thing. But we shouldn't forget that fundamentals are driving what people do in the market. The problem is that the stock market isn't fair. There's some people who have better access to information than others. And when they learn of something important, an important change, they can act in the market before the rest of us. Now, fortunately, they leave a trail for us to follow. Every time someone makes a trade, if a big hedge fund accumulates a large position in a stock, well, it shows up in market action. And the thing I'm sort of reminded about in the last short while was 2 weeks ago, Carl Icahn, the famous activist investor, announced that he was now out of Apple, and it caused even more weakness in Apple after their weak earnings. But what was important to see is that when you looked at the chart, Apple broke its upward trend line, over a month ago. And I would say that, a guy like Carl Icahn unloading a huge position in Apple is what created that chart. And we only learned about the reason why after it had already happened. And that's why it's so important to listen to the chart, because it reflects what people are doing, and the news usually follows after that.
I'm talking with Tyler Bolhorn, stockscores.com. Tyler, can you, you apply it to all markets. Just give me your take again, now that you've watched the price action. What's oil telling you right now as an example?
Well, oil broke its downward trend, and it's built a rising bottom. I would say that, the upward momentum is starting to weaken. We've had the bounce. The easy money has been made. But having said that, I think the buyers are still in control in the short term. They are, however, facing the uphill battle against pessimism. So, I put ratings on these indexes and markets every week. I've got a neutral rating on oil right now. I think it's slightly more likely to go higher than lower, but I don't know that the risk-reward makes sense to enter those positions today. Now, if you hold them, no reason to sell them because they're, holding their upward trend lines on the oil stocks. But until I see some excitement come in again, and we need a new catalyst, I think, the easy money has been made there, and, I would say slightly optimistic to neutral.
Yeah. Well, it's a great way of looking at it, though, is dividing between are you already in, are you looking to take an initial position? Your point is so well taken about, you need another catalyst to make the next boost come here. So you haven't got the sell signal, but you haven't got an initial buy signal here.
That's
for
right,
people just entering the market. And there's so much like that because we've had, obviously, the volatility has been huge. And I don't want to run out of time, so I'm going to take a break, but I'll come back and I'm going to ask you about gold and silver because they've also been part of that kind of a move here. Tyler Bolhorn, you can find him at stockscores.com. Also coming up, I mentioned I'm going to the Hollywood file for my shocking stat. It was literally, this happens a lot to me, that's how I get the stats, but I'm reading something and I really do stop and go, wow! And that's what I'm talking about. Kind of funny. My stocking stat coming up, Tyler Bolhorn more. Aussie Jurek, wow, where are the hidden gems out there? He's also got, he says he's got some waterfront for me, close to Vancouver, that's very affordable. I'll ask him about that right here across the Money Talks Network. It's interesting to note that top article this week on moneytalks.net was Martin Armstrong saying Saudi Arabia on the ropes. We've posted it again. Guess what happened today? The longtime Saudi Arabian oil minister, I think he's been there over 20 years, was fired today and replaced. There's stuff happening there. Maybe the most important thing, though, of course, if you go to moneytalks.net, right there, you can donate to the Alberta Fires Appeal through the Red Cross. Go to Red Cross, too, but we're just trying to make it easy. We've had that up since the get-go. And I've done it myself, of course, but I just hope you do take time. That's the best reason to go to moneytalks.net. But one other is there's going to be a live webinar today after the show at noon Alberta time, 11 o'clock Pacific time. You just go to moneytalks.net and you click on, and you can go with Tyler Bolhorn there, how to analyze any stock or market in 10 seconds. You'll actually see the charts, see Tyler go through it. So kind of easy to do when you've got the visual to help you there. And you'll see how straightforward it is and kind of fun. I love it when people make it kind of a hobby, whether it's stocks or they want to look for investing real estate or a home or something. Make it a hobby. Have fun with it. And I think that's a real key. Tyler, before the break, we talked a little bit about oil. I want to come to gold now, and just what are you seeing on the gold and silver charts?
So looking at the long-term chart of gold, it broke its downward trend early in 2016. It had a good run. We all know about that, how gold stocks, many of them have gained 200-300%. And then we've kind of gone into a sideways range for a little while. But last week, and not this current week, but the week prior, we actually had a break to the upside from a rising bottom. So one of the things I'll show today is how markets tend to turn around. You have step one, which is a break of the downward trend line. Step two is the build of a rising bottom, which is a sign of optimism. And then step three is that abnormal break from the rising bottom. So we've now had all three steps. That points to gold continuing the strength that began, February 2016. I think on the gold stocks, I feel like they're risky here because they've gone up so much. Many of them didn't pause while gold was going sideways. So we had on Friday, actually, we had a continuation pattern, which is something called a flag break. And that occurred on Friday, which means gold stocks look like they will continue higher if you own them. I see no reason to sell them despite the gains, which have been considerable, obviously. Initiating positions in the actual miners, I think you got to be pretty careful because they are risky. It's a great trade if you are a trader and you can watch them closely because these things can move 20, 30% in a week. However, if you're more of a passive investor, I would be cautious initiating positions here. With all that said, to me, gold looks like it wants to continue the upward momentum that started earlier this year.
What about the overall market? Like if you look at the Dow Jones right now, it's certainly, obviously, I mean, what an insight, Mike, that I'm saying it's volatile, but it's volatile, and I'm not seeing such a clear direction at this point.
No, well, we had a great run again from the low in February. That low was off of the talk about, 2 to 4 rate increases in 2016. And then the rhetoric started coming out, well, maybe that's not the appropriate thing for the U.S. Fed to do. And we had this great rally. That great rally has brought markets up to resistance. And one of my simple rules, which I'll discuss today in the webinar, is when markets rally into resistance, which is a ceiling price,
yes.
Okay, it's based on the past highs, we usually get stuck. And we got stuck there 3-4 weeks ago. And we've kind of been drifting lower. But on Friday, we actually had a unique event where the market started low and ended up closing on its high and up for the day. So I would say based on that, we've got, probably a 70% probability that the markets will move back up to that ceiling price that they hit mid-April. Now, that's not a considerable amount of gain potential. We're talking about 1 to 2% upside until we bump against that ceiling again. But I think as long as the Fed is not raising interest rates or not talking about rates, you've kind of got that holding hand to guide the market to the upside. Will we have the catalyst to break it through? That's the only time will tell. For now, I think we probably have 1 to 2% upside in the short term, and then we're going to get stuck again.
Let me just go over quickly. By the way, you can find Tyler at stockscores.com. You're going to do the seminar coming up. I want to promo it a little bit here because this is a chance. It's a difficult subject. When you see it, you'll see how easy this is. And that's one of the things I love about your work is that this can add to anyone's arsenal in reducing their risk and looking for opportunity. So specifically, you're going to be showing the kind of charts, these kind of questions I'm asking, but you'll have the chart to show how it works.
Yeah, exactly. I can draw on charts. And, the beauty of the technology available today is I can be sitting in my home and you and yours, and I can draw things out and discuss it online in real time. You can see what I'm talking about. Obviously, that's something that's hard to do with radio, but visually during this webinar, I'll show you all this stuff. And if you can draw a straight line with a ruler, then you can do technical analysis. I don't get very complex in how I apply it. I use simple things like drawing trend lines, looking for rising bottoms and falling tops. Anyone can do this. It's simple. It's accessible, and I think that's what makes it a great method for the average investor who doesn't necessarily have a great insight into what companies do or what industries are all about.
Well, as I say, it is a fascinating time in the market, and I don't see, people, as I say, this can be a lot of fun, too. It's intellectually engaging, and to have another tool like that, that's why I'm glad we're doing it. People just go to moneytalks.net, moneytalks.net, and you can just sign up. It starts an hour after the show's complete, no matter where you're listening from today, an hour after the show's complete. And while you're there, sign in a few minutes early because you get a chance, and I hope, and I'm sure many of you already have, so I acknowledge that. But you can make your donation to help out all of the people who have been devastated by the wildfires near Fort McMurray. So take advantage of that by going to moneytalks.net, plus lots of other great articles on there. Tyler, thank you so much for taking the time. Always a pleasure to chat with you, and I know the seminar will be great. The webinar, sorry.
Have a good weekend.
Stockscores.com, stockscores.com with Tyler Bolhorn.